of fundamental asset management, and this is a brief review on the performance of our AIM portfolios over the pandemic and our assessment of the situation and the outlook for AIM. I think it's worth recapping on the dramatic change in AIM since we've been started managing AIM for IHT planning portfolios 16 years ago. So we've got plenty of experience and seen plenty of highs and a few lows. Back in 2004, when we started, AIM's total value, market capitalization value, was only 22 billion. Fast forward to now, June 2020, and the value of AIM is broadly, all AIM companies, 100 billion. You've got 18 companies now worth more than £1 billion, including Boohoo Group, the largest, which is currently valued at 4.5 billion, making it the fourth largest retail group on the UK stock market. Now that's a massive change from 2004. Those 16 years ago, we saw only one company with valued more than £1 billion. And significantly nowadays, there are about 180 businesses on AIM valued at more than £100 million each. This means it's of far higher quality than it ever was, and therefore far better placed to withstand the current crisis and hopefully ultimately, in the case of many companies, thrive. Our AIM portfolios are positioned towards larger AIM companies. So the average market capitalization of our AIM book, the average single company, is worth over £500 million. We do hold shares in smaller ones. However, by and large, we're addressing the bigger end of AIM, which are businesses with significant revenue, very profitable, often great cash generation, but still retain significant founder ownership. So what's happened to AIM over the last few months? Well, we saw a big sell-off, and subsequently, much like all other markets, we've seen a big bounce. And AIM recovered very strongly in April, very strongly in May, as did our AIM portfolios. It's come off a bit in June. We've seen the first sell-off, big market sell-off. And it was probably about time, really. Everything was getting very overheated, and it was about time things calmed down and paused. So we've had a first sell-off, and I expect things to meander along now for the next few months, because we've really got to see how some of these companies survive coming out of the crisis. In terms of our AIM portfolios, really we've done very little. We've been analysing and studying a huge amount of news. There have been countless fundraisings, never seen so many fundraisings. There's clearly plenty of money out there to support really good businesses, and that's been flooding in. And only today, one of our AIM portfolio companies, a smaller one, Nexus Infrastructure, raised £10 million. Its founders and its chief executive participated big time as well, which is great to see. The only main change we've made to our AIM portfolios is to exit a position called Johnson Service Group. And poor old Johnson Service Group is in a pretty tight spot. Johnson's main business is the laundry activities and services for companies in the hotel, restaurant, catering sector. And Johnson, you can imagine, 60% of its sales are to that sector, and that sector looks incredibly challenged. So we decided to reduce our exposure to that area. We didn't have much anyway. And we think it's prudent to exit that because it's just very hard to judge what the future holds for poor old Johnson. I rudely referred to it before as one of the most boring companies on AIM, and unfortunately it's become significantly more exciting. We've exited Johnson Service Group, and we've reinvested in some existing positions and also initiated a new position in a company called Annexo Group, which is a provider of legal services and non-fault accident management services. Annexo is an interesting business. We think the valuation looks interesting. Doesn't look too expensive. It's got quite a attractive short-term and mid-term outlook. And we think it's an interesting contrarian position in the current climate. So we've started buying shares in Annexo, and hopefully that should continue to perform well over the next few months and years. But that's really been about it. But there's no end of news flow to follow. And what we're really reassured by in this climate are the number of founders still involved in our portfolio companies, and they've still got significant stakes. These people have got tens of millions, some hundreds of millions of pounds at risk, of value at risk, and it's great to have them overseeing things at this time. And many founders have committed to fundraisings as well, which also gives confidence. So, and I think that's a real peculiarity of AIM, which, returning to the first point, is a totally different market than it used to be. And it's in far better shape than it ever has been. And we have great confidence that it'll come out of this extremely well. That's it for now. Look out for future updates on this channel, or if you want other information, just go to our website, www.fundamentalasset.com. Thanks very much.